Welcome to this week's market prep, where Dan and I, we basically prepare for the week. What the structure is going to be is we're going to go over the state of the market. We'll go over charts, mostly the S&P 500, the NASDAQ. We'll go over what I have on docket this week. We'll go over some sectors that I think are interesting to pay attention to, especially as the semiconductor, the memory, the AI theme-ish that's been very strong, potentially starts to unwind here a little bit, and kind of where the money is flowing. And then after that, we'll talk about any like geopolitics, things that are relevant to trading, if there's really anything. And then we'll move on to specific charts, specific timeframes, maybe commodities, we'll talk about commodities per usual. And then we'll end with our special topics, which is volume, how to use it, why not to use it, what the standard like recommendations are for volume, but kind of why we as a trading group don't really use it that much. And then we'll open it up to the floor with questions and answers.
Don't forget earnings. Don't forget earnings. Earnings season's coming.
Earnings season is indeed coming. Let me load up.
Very important.
Oh, actually, yeah, you're right.
Because the banks are coming first, and they're coming.
Let me go to my handy dandy earnings whispers here. You guys are going to get a look into my YouTube or my X. I'll load these bad boys up. I love these guys. Shout out earning whispers. You keep me on my toes, or at least updated. All right, so we don't have anything coming up bank-wise this week. Penguin, no. That's probably what, upcoming week?
Yeah.
Yeah. All right, cool.
Yeah. They're coming.
They're coming. We got to prep for them. You said banks are first, per usual.
Yeah.
Great.
I mean, Delta is going to be a big one on Friday. That's an important one. I can't see the rest of them. Delta's going to be an important one, but we'll get to it. But I'm saying Delta's, and then the banks are next week. Banks are next week, and then high beta tech starts, I think, in 2 weeks.
Yes, definitely something to pay attention to, and be prepared for. So with that on docket, let's get going then. Overall, the way that I see it, S&P 500, if you're looking at this here, it hasn't really been doing anything, right? Basically,
the OBS is up. The OBS is up.
I think it's a little delayed. I hit the record button on there. It should go away.
It did.
All right, perfect.
Yeah.
Good. Okay. So that was probably about 10 seconds. So there seems to be a 10-second delay. All right, that's good to know. Thank you. Okay, SPX, cash index, S&P 500. If we're looking at this range here, I think we can start it at late April 30th. Maybe even May 1st. We haven't really done anything much since May 1st. I think that's kind of the bottom of the range right here. As you can see, June 9th, that was kind of holding. We've tagged the inclining 50 EMA a couple of times, but really what I have patterned out here is levels that are interesting to me. And then also you can kind of see this wedge pattern here. That's really pretty obvious, right? Wedge pattern, triangle pattern, whatever you want to call it. But really the grand scheme of things, the overall market hasn't really been doing much since early May. Agree with that or no?
For the most part, yeah. For the most part.
For the most part, right?
Now. For the most part, yeah.
So obviously there are pockets.
Let me start again. Volatile, yes, in terms of huge ranges. But we're going nowhere. That's the most important thing. We're having huge ranges. That is trading. But as an overall, we're literally just running in place.
Yeah, correct. We closed basically where we were at in mid-May, right? So basically all of June. Nice large ranges, volatile, tradable, yes, but big picture, we're not going anywhere. There's a lot of talk about the AI bubble that's going on. I think you're in this camp that it is very different than what happened back in the .com bubble. And now that, semiconductors and memory, they might be starting to unwind. Everyone's saying, okay, here comes the AI bubble. Everything's about to burst and pop. I'm not necessarily in that camp because from my understanding, when things are about to burst and pop, everything starts to burst and pop, right? Does the money actually flow into other sectors, or does it start to come out of everything? And what I like to look at is the equally weighted S&P 500. This is closing at all-time highs, right? So this takes out the weight of the large cap tech stocks, basically the top 10, NVIDIA, Apple, Microsoft, Google, Tesla, et cetera, and it equals the weight across all 500 names. And this is not, this is strong, right? This isn't alarming to me at all. If we go to the NASDAQ, you see that the same wedging pattern, right? The Dow Jones, that's hitting all-time highs. IWM, Russell, that's basically, I mean, it's chopped around for the past week, but that remains strong. It's above the 8, it's above the 21. There's a cash index, XLK, basically QQQs, right? Tech makes up, what would you say it was the other day? Like 30, or last week or so, 38%? Or did you say it was in the 40s?
Something like that. Yeah, it's like 38%. No, it's not 40. It's like 38%.
Yeah. So this continues to chop around, right? I don't think, simply because maybe I'm making it too simplistic. Correct me if I'm wrong, but this right here, wouldn't we see other signs if the AI bubble was about to burst?
So I think you have to define what bursting means.
Mm-hmm.
That's number one. I think that's the first question. You have to define what that actually means. So if you're looking at it from the individual names, Mag 7, I think for the most part, is red on year as a group. As a group, it's red on year. They are all starting to cut back on spending, all of them. So if you want to look at it from what is considered a pop, that could be a sign because they're not as aggressive on the spend anymore.
Yep.
They're not doing it. So that's clue number one. And that doesn't mean pop. It just means they're maneuvering their businesses because they're not able to monetize.
Right.
You know, what you have to ask yourself a different question before we even move forward. Why is it that OpenAI and Anthropic are asking for the government to take stakes in their companies and they've pushed off their IPOs? Why are they doing it? Or they're not necessarily officially pushed them off, but they're thinking about pushing them off. Why are they doing that for?
I would think to make sure that there's actually enough investable like money to be in there, because SpaceX, I don't know if they front ran them, but
SpaceX makes money not on space. It makes no money on space. Zero.
Right.
That's not where its money's made. Its money is all made in Starlink. All of it.
Yes. So why would they push it off then?
Because I think these companies are not making the type of money that everybody thought that they were going to be making, or everyone was the perception. I think that's the bigger issue that you have at play here.
I think there's also an even bigger issue at play. But go ahead. Sorry.
Go ahead.
I mean, nope. And what? Go ahead. Finish your thought. I didn't mean to cut you off.
No. I want to hear. I want to hear.
So not only are these companies not making money off of these, right? And yes, I've also heard that there's a potential that they might start decreasing CapEx spend, which would obviously be good for Mag 7, I think.
Well, they're doing it now. Facebook already said they're doing it.
Oh,
they already said they're decreasing.
When did they say that?
Facebook said, I think earlier in the week, they said that they're starting to cut back. I think Microsoft said the same thing. They didn't make a big hoopla about it, but one of the reasons why I think there was one day where Facebook got smacked this week, right? Was it this week or last week? I don't remember.
Meta got smacked on Thursday after gapping up like 12% on Wednesday. I mean, it's getting smacked overall, though. This is what the chart looks like here.
Yeah, I'm saying that they're all starting to cut back because they're all starting to see that they can't monetize it, and that's the bigger problem that they're all facing now. So you can't keep spending into oblivion. I mean, at the end of the day, they're supposed to make money. If they're not making money, what are you doing? Like what are you doing? So I think that's one issue that they're having. They're good businesses. Don't get me wrong. They're good. AI is a compliment, but they're good businesses. They're well-run businesses. But as a whole, they're not doing well. Microsoft is grim death. I mean, we'll get to it, but Microsoft is grim death. Even if let's say, even though Netflix is part of Mag 7, but whatever, Netflix is grim death. I mean, the ones that look really good NVIDIA looks pretty much like crap now. The ones that really look good out of all of them is Google still looks fine. I mean, it's holding where it needs to. Amazon is not really in that realm, but it's kind of holding. We'll get to in a second. But as a group, they don't look good. So what's keeping the market up right now, and more than anything else, is your semis, and they're rolling over. Semis are rolling over. Forget about Micron, forget about SanDisk for a minute. As a group, the semis are rolling over. Doesn't mean that they're short and they're falling apart. They just don't have that same momentum behind them. The momentum is kind of dwindling, and they're not the same trade that they were 2 weeks ago or 3 weeks ago. They're not the same trade, and that's where things are starting to get a little bit more squishy, so to speak. But I feel like you can't use the indices, because at the end of the day, because of the way that they're made up, if the community gets annoyed and they want to keep somebody in there, they want to keep the numbers up, they just replace it. Why is Verizon being pulled out and Google put in? What was the purpose behind that? Verizon all of a sudden was a crappy company. They weren't doing well. No, it's in order to keep this sucker up and to keep it going, they got to put in high beta tech. So that's why we talked about this earlier. We talked about this last week. I know I'm going off on a tangent, but it does tie in. Dow theory doesn't work anymore, because Dow theory was dependent on certain companies and certain industries or certain sectors being represented in the Dow. It's basically another small high beta tech instrument. That's what it is. So, granted, you still have other people in there. I get it. I understand that. It's a weighted thing. But if you look at the overall weighting of which sector is dominating the Dow, it's tech. Plain and simple. But sorry.
No, it's all good. It's all good things. And so I'm gonna take a step back real quick, talking about the headwinds I think that are coming into this AI trade for now. Maybe it's not a crash, but maybe like a mid-cycle slowdown. SMH, I'm showing it up here, right? It's starting to roll over a little bit. It's still holding the 50. It's below the 21. And then if you look at SOX, it's
which one?
SMH.
SMH. Okay.
Yep. And then SOX.
Yeah.
As well, right? So it's basically the same look here. We don't know. This could pull back very strongly, maybe to the 200. Maybe it breaks. I'm on SOX right now, 481, and heads lower. Who knows? Or it can just consolidate here, right? We're not here. I'm not here to make predictions. So the headwinds that I think are coming into the AI trade, specifically with semis and memory, are a couple things. One, you've already mentioned it, CapEx with the big spenders. They're already decreasing CapEx, right? Now we also have issues with OpenAI and Anthropic. Number one, throttling their users unknowingly, especially like with the whole Fable 5 coming out. Also, with them basically stealing. I don't know if stealing is the right word. That might be a little bit aggressive, but in my mind, stealing businesses, right? So these businesses, such as Figma, used Anthropic to help scale their business, blah blah blah. And then what does Claude Code come out and do? Or Anthropic, they come out with a Claude design, right? And Figma got absolutely crushed. They are completely these companies that are paying to use these frontier models, and the frontier models. Number one, they're not making money yet. Right. And but also these frontier models, they're basically gathering all of these data, all of these companies' data, and then kind of spinning up their own companies to become competitors of these companies that are paying them to use it. And so that's a problem right there. Now there are trust issues now with Anthropic, especially because this was kind of under the table and people did not know this was happening. Then also with AI becoming more intelligent in general, recursive self-improvement, quantization.
I don't know if it's so intelligent. That's not true. I don't think it's so intelligent.
Intelligent may be the wrong word.
If you ask,
I do think,
if you were to ask AI, let's say tomorrow, ask any AI tomorrow, what is the high, low, open, and close of, let's say, the S&P? It's not going to give you the correct numbers.
No, that drives me nuts. Grok gets it wrong all the time.
So does Gemini. So does what's it called? So does ChatGPT. So does Claude. They all get it wrong. How is that possible?
Right.
It's public information. How is that possible?
Yeah, it's very easy to get that correct. I don't know about that. That's a good point. So intelligence is a wrong word to use. It's getting more efficient, I suppose. The tokens are getting cheaper. Why? Because of recursive self-improvement. And the models are being able to be quantized, so use smaller. And there's different, like you can have these large models, but within these large models, you can have different experts that you can call upon for different tasks, right? So they're also getting a little bit more efficient with size. And so I think we have those three. CapEx, decreased spending. Now we have issues with trust of the people of the large companies or even startups that are using these frontier models with their data being stolen, and then these frontier models coming up with their own businesses to compete with them. And then we have this, if these models become more efficient in smaller sizes, how much further does a memory trade actually go? I think we have overall, I think things are heading much higher. Just when, I don't know. But I think we have those headwinds sitting right now. What is dead in the water?
DDR5 is basically dead in the water right now.
What is DDR5?
So
I don't know what that is.
Yeah, no problem. So RAM, it's basically RAM. That's really what it is. So there's just certain generations. So we were on DDR4, we went up to DDR5. The problem is that all these companies started going into DDR5, kind of neglected DDR4. So you ran into all these shortages, but the models are not designed, or the chips are not designed for regular people.
Mm-hmm.
They're really designed for these massive, data centers that are like a block long.
Yeah.
And that's what's causing it's kind of like the same thing. How do I say? The best way to explain this. Back in 2018, 2019, gamers will know this. The gaming community had this, and then we had this during COVID, where you remember I'll do it for the regular people because the gamers if you're not a gamer, you're not gonna understand this. Remember there was an issue with chips for cars? They could not get chips for cars.
Oh yeah, in 2020.
And 2020 was like a huge issue. Like what? All of a sudden, you just couldn't get the chips.
Mm-hmm.
And there's like thousands of chips that go into these cars. They couldn't get them. What happened? So you had a situation where the legacy chips that are used in cars were not as profitable. So what they decided to do, these companies, was neglect them, because the auto manufacturer said, we're not going to be ordering as many cars. So they retooled their machinery, or whatever, redid their manufacturing, and basically focused on these other chips. The car manufacturers got it wrong in terms of what they were going to need, and things came back quicker. But once the chip manufacturers had already switched gears, they couldn't go back. It took them forever to do that. You're having the same situation now, and you also had that in the gaming space when NVIDIA basically exploded in 17, 18, 19. Pre-COVID on the GPU side. They started coming out with these incredibly expensive high-end GPUs where they were charging $2,000, $2,500 for these GPUs, to the RTX 2090s. It started in the RTX 2000 series, like the 2090s, I think that's what it was. And then it went to the 3090, the 4090, et cetera. And a regular GPU you could get for, let's say, $300-400, a powerful one. All of a sudden it went from $300-400 up to $2,000. And they were making more money on the 2000 ones. So they basically started, to a certain extent, kind of neglecting I don't want to say the lower end, but the mid tier to upper end. And they only focused on the high, on the ultra high, which pushed manufacturers out. So you used to have, let's say, AVGA was big in the GPU space. They completely left because they didn't want to deal with it anymore. The point I'm trying to make by bringing up these examples is that we're kind of seeing that now in the RAM space. That's what's causing all of these issues. Normal RAM that used to cost, RAM is cheap. They're like $200, $200, $100, $200. You get RAM sticks. Those same RAM sticks now are $500, $600. Things that cost, let's say, $400 or $500 now cost $2,100. And it's all pretty much A self-inflicted gunshot wound.
So where do you see this going?
Like anything else, eventually it resolves itself. It's just how much pain gets inflicted before it does. It gets resolved. Right now these guys are riding high, and they're kind of just like whatever. Eventually things come back to earth. So there will be resolution. It's just going to take a little bit of time. But I saw an interview, and this actually is going to tie in very well. I just saw this interview. It's an old interview with Tepper. Tepper was on CNBC. I guess it's from a few years ago. I don't know. I think that's when it's from. And just in case everyone doesn't know who David Tepper is, David Tepper right now owns the Florida Panthers. He's a hedge fund manager. He made his money as a hedge fund manager. Very, very smart guy. He's one of those guys that when he talks, the markets listen. There's a few guys that when they speak, the markets actually listen. So you had David Tepper was one. Druckenmiller's another one. What's his face? Cooperman from Omega Advisors is another one. Ackman, not so much anymore. When he used to. Einhorn, he doesn't talk as much. So when he talks, people listen. There's a few guys that when they talk, people. What's his face? KLAC. There's a few guys when they talk, people listen. They can move. Tepper has moved markets during 8:30 interviews or 8 o'clock interviews on CNBC. He's literally moved the markets by things he said. I've seen him do it. Literally. So he was discussing something in this interview. And again, I don't know when the interview is from, but it's important. And he's talking about liquidity. And he was saying valuation doesn't matter if liquidity is there. Meaning, if you have a market that is overvalued, but yet there's liquidity pumping into it, it doesn't matter how overvalued it could be. It could be overvalued from today until tomorrow, until for the next 50 years. If liquidity is pumping into the market, it will stay overvalued forever and ever and ever until that liquidity comes out. That's what we're dealing with in this market. We're not really dealing, I always like to say the meme maniacs, I like to make fun. But at the end of the day, you still have liquidity in the market. Liquidity is not volume. There's just money constantly flowing in. Because of that reason, to a certain extent, you can't really fight that. It doesn't make a difference if it's gamma squeezes from the options or what have you. It's like fighting the Fed. When the Fed is pumping money into the system, you can't fight that. It's kind of the same thing. Can you find shorts? Yes, you can always find shorts. Are the shorts, bad guys? No, the shorts are the policemen of the market. Are the shorts going after Home Depot and McDonald's and Coke? No, that's not who they go after. They're not interested in those guys. They go after accounting irregularities and literal stupidity in the stock. That's who they go after. And when they go after the literal stupidity, like when Chanos was going after Tesla a few years ago, when they're wrong, they throw in the towel. They say the hell with it. When they know that there's real fraud and accounting irregularities, that's a whole different ballgame because those stocks go to zero. But when you have liquidity pumping into the market like you have consistently now, and you have a president that's literally watching the market every day like a day trader, you're going to get movement to the downside. Don't get me wrong. You're going to get it. But you're fighting forces that are working against you. Now, as a trader on a short-term basis, like what we do, you can do the short. It will work. But if you're looking to short because you think something is we're so overvalued and you're going to step in front of it, you may get 2 or 3 days of yay. And then at the end of the day, you're probably going to get your clock cleaned. And not because you're wrong, but just because the liquidity is coming into the system. Now, it's not necessarily Fed, but there's liquidity constantly coming in. Because if you think about it, everybody keeps talking now, and I don't know why they keep doing this. And the smart people that I used to follow, I stopped following because I just think I don't know what they're thinking. They keep mentioning South Korea over and over and over again. South Korea, South Korea, South Korea. South Korea has like 2 stocks in it. Okay? You have Samsung, and I forgot the other one. Obviously, it's got more than 2 stocks, but that's really what's driving that market. Volatility is like at 100 over there, but it's 2 stocks. And nobody cares about South Korea. I mean, I don't mean to say it in a negative way, but nobody cares about South Korea. It's not a market that anyone cares about. It's like when they say, it's like when it goes limit down, everybody's freaking out. Oh my God. Nobody cares. Like nobody literally cares about it. That's not where, that's not a market where it has any meaning. Meaning means companies that actually matter. Outside of Samsung, there's no other South Korean companies that really matter. And I'm not making fun of them. I'm just saying they don't really matter. You look at the DAX, and let's say in Germany, why is the DAX so important? Because the DAX has real companies in it. It has BMWs in it, Daimler's in it. Now, granted, those are both auto manufacturers, but it has ThyssenKrupp. It has a wide array of companies that are so crucial to Europe. You look at our markets. Our markets, for the most part, granted, we have more global companies, but the companies that are in there that are driving things, whether it's insane or not, they actually mean something. If Samsung were to list here, which it has like a dual listing, but no one really trades it because it's like a weird listing. It would be a whole different ball game. So you have to take things with like a grain of salt and like what matters versus what doesn't matter. But going back to my initial thought, the market is doing crazy, wacky things, but at the end of the day, there's no liquidity vacuums. There's still plenty of liquidity in the system, which means stocks will only go up. And also, I saw this on Twitter, and at the time, I thought it was crazy, but then I thought about it more, and it made a lot of sense. Because I just remembered when your president or your administration is literally sitting there commenting on the stock market every single day, watching the stock market every single day, only wants this sucker to go up. What do you think's going to happen? What do you think's going to happen? Can you make money on the short side? Of course you can make money on the short side. I'm not saying you can't make money on the short side, but think about it logically. Common sense. Is this guy going to let the market crash 35%, 40% on his watch? Not a shot in hell. Not a shot in hell. That's why you can find things to short, but you got to be careful. Like you really got to, because you could get creamed just because of the fact of the liquidity that's in the system. Basically, even though the Fed's not there, but don't fight the Fed. Same kind of concept.
Right. Good stuff. Thanks for that. I agree. I'm not saying that this is a time to short, especially I don't think the AI trade's going to fully unwind. Some rest, some digestion, a deeper pullback would be nice. Just as a reset though, right? And it totally makes sense with how much this administration, our president, talks about the stock market, how many highs it makes, blah, blah, blah. We've had a couple of quick, deeper-ish corrections, 10, 15% or so. But anything 30%, you say 40%, yeah. I have a very hard time seeing this administration allowing that to happen.
We have a different situation now. And more importantly, just to put a button on this, you have a Fed that's not backstopping you now.
Yeah.
And that's very, very important. Like you have a Fed now that is not backstopping you. And that's why when I saw the headlines of, the Fed, hikes are off the table, I don't agree with that. And I think that's why we went red. I don't agree with that at all. I think that hikes are on the table because he's looking at it from the vantage point of, we have an inflation problem. He was very clear about this, Warsh. He was and everybody wants to not believe it. It's like when we talked about this the past couple of weeks, when Powell kept saying higher for longer, and no one believed him. I think you're in a situation of the same thing. I think people are in denial. They don't realize this guy wants to get inflation down. That's what this guy wants to do. He wants to reduce the balance sheet. Why he was picked, I'll be honest with you, I don't even know. To me, it makes no sense. And to be honest with you, I'm waiting for the next meeting for dummy and stupid, and I got to get rid of him, and I don't know why I picked him. And I know it's coming, and so does everybody else. So you have to realize also, when you have a market now that potentially does not have the Fed at its back, and you're going back all the way to QE, what's that, 16, 17 years? 16, 17 years. It's a different environment. Now, does that mean that he's completely turning it off? No, I don't think he's going to do that. But he was very specific in his language. When they asked him the question, and he said in the press conference, and you can review the press conference, you can see it for yourself, he said, I'm not concerned about the stock market. The stock market will sit and deal with asset prices in real time based off of the data, not off of what the Fed is doing. That was key, and everybody glossed over it. Anyway, sorry.
No, it's all good. I know. I think Warsh had another interview earlier this week.
Yeah.
But did you watch it? I didn't watch it. I
No.
haven't even found it yet. I've been meaning to, but I haven't. And I need to find it. So I'm super curious what he said. But basically, what it seems like, from what I've heard, he again reiterated about the focus on 2% inflation, about getting there.
Yep.
And so, I don't know. I don't think that's necessarily a bad thing. Hopefully he hones in on that and gets things under control, I suppose. But yeah, I need to listen to that interview.
They're working on it for 5 years and they failed. So
I know. We can have a little hope, right? We can have a little hope. All right, let's move on to, so where's money flowing? Looking at the sectors, right?
Well, first of all, before you finish, when you look at the SMH, we should look at the top. Let's look quickly at the top 10 holdings. We can blow through them. So in the video, everybody knows. Let's look at Taiwan Semi, TSM.
Do you know what they are? I'm pulling it up real quick on Google here. So NVIDIA, TSM.
Yeah, I'm giving it to you.
Oh, you got
TSM.
it? Okay. So hang on. Do you want me to literally pop them up?
Yeah.
NVIDIA. Okay. Looks like trash.
Well, NVIDIA, everybody knows. Yeah,
yep.
Let's move on.
TSM. Failed breakout.
A quasi double top.
Yep. That's
not enough time, but whatever.
Sure.
Micron, whatever.
Rolling
Micron
over.
closed below the 21 for the first time.
Yep.
On Thursday. That's a big one. That's what needs to be watched.
Yep. I think it's headed to 50 EMA. 880 is my target.
I think it's going to gap fill.
You think it's going to get all the way down here, 820 to 780?
I think if it gets through the 50, what is the stock is moving. I mean, the stock moves every day, and this is the most retarded thing. The stock moves every freaking day 10 to 25% every single damn day from high to low. 10 to 25%. NVIDIA, which is the most valuable company in the world, is moving 3-4% a day.
Yeah.
This stupid thing is moving 10 to 25% every single day. It's insane.
Yes.
So why can't it get there? Why can't it gap fill? Sure, why not? If this thing gets momentum to the downside, why not?
Oh yeah. I mean, I can see it going to 660 if it really gets going. If you get that gap fill, that'd be the next logical area.
I think you get to 5. I think you get to 5.
450. Who's got 450? No, I was kidding. Yes, I agree with you though. I do agree. Level by level.
I'm not talking book now. I don't have a position in it, so I'm not talking my book. I'm just saying.
Sure. All right.
With these momentum names, you forgot what AMD. AMD has got to hold this 21 day.
Yeah.
If this 21 day is 516.40, let's say 516.
Yep.
That's support 1. Support 2 is going to be, what was this? Monday's low. Monday's low is 495.
Yep.
Ish. That's your support 2. It's got to hold that.
Yep.
If that doesn't hold, then you're looking for a move down to 480. If that doesn't hold, you're probably looking down to about 470. And then you can plot them out at like $10 increments. And then you get another, not really a gap fill but you would get down to 450 probably relatively quickly in AMD. Right?
Yeah.
AMD, let's go through quickly. Intel, this thing went from dead and buried to resurrected very quickly. But again, also
it's kind of dead now. Oh, well, sorry. You're talking about, my bad.
Intel kind of holding in there. Again, closed below the 21 day, took out Monday's lows, but didn't settle below it, which is constructive. If Thursday's hot, I'm gonna keep mixing up Thursday and Friday, so I apologize. But
very good.
If Thursday doesn't hold, then you got to move down to the 50 without a question. That's probably where it's going.
Yeah.
Okay. Next one, I'm just going to go through these quickly. Broadcom, I'm going to blaze through it. Broadcom, I mean, it's right at the 200.
Yep.
This is door knock number 1. You'll probably get some kind of bounce if we're up tomorrow. You can't judge it by futures tonight because it doesn't matter. Everybody's been getting into this thing where they look at futures and everything's party, and then all of a sudden at freaking 10 o'clock we roll over and we go from green to red.
Yeah,
so
for sure.
you really can't judge it by anything. Okay, but Broadcom not looking so great. Qualcomm also not looking so well. This is by the way why the SMH is rolling over. Like you can't just look at Micron and SanDisk, and SanDisk isn't even in the top 10. You got to look at what's going. You got to look at the top 10. You got to see what's going on. So you look, Qualcomm is not looking so healthy. Let's say Texas Instruments, TXN. I mean, it looks okay.
It's holding for now.
It's holding. I mean, but it's not. I wouldn't say this is amazing. It's basically sitting in Friday's bar. It hasn't moved. It's been pretty much a Friday's bar the entire time. Lam Research, LRCX. This was an ugly day on Wednesday and Thursday. This looks like this is really starting to get a little bit smoked. Kind of have to watch out for that. And then your last one is CLA Corp, which is KLAC. Also, these were ugly days on Wednesday and Thursday. Ugly. These are the types of days where they're stand up and take notice days based off of the way the bars were. They're very, 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 very potent. They're very, very different. And if you're someone who's looking at charts and you're a chartist, if you look at Wednesday's, Thursday's bar, you basically have, to a certain extent, same size candle, same size body as Monday and Tuesday. So Monday, Tuesday, Thursday, Friday are basically the same exact. Now, obviously, it's not to the T. So don't start adding me on Twitter and say But if you look conceptually, they're basically the same size. Granted, the range is a little bit different, but if you're just eyeballing it, they're basically same size bodies, same size candles. And
if you look at it, dollar amount moves.
And the more important thing is, and this is really where it really becomes very, very important. We talk about this every day. Sometimes you're with us, Cobb, and sometimes you're not. But every day we talk about this. If you see a move, and let's say we have a move from 10 to 11:30, okay, from 9:30 for 11:30. If by and it's a move up, okay, let's just use that on the upside. If a half hour later at let's say 12:15, we've taken back the entire move that we did for 2 hours, is that bullish? That's not bullish.
No.
That's not, by the way, it's a dip, let me buy the dip. If you're negating that kind of price action 100%, something's wrong. So when you look at these semis, and you don't even need to go through all of them. Just look at the top 10. The top 10 of the SMH. If you're looking there and you see that Monday, Tuesday was completely negated by Wednesday, Thursday, we round trip the entire move, whether you have a long-term bullish outlook on the stock or not, that is not bullish. If you're a short-term trader, and we're really only dealing to a certain extent on the short-term timeframes. If you're a short-term trader, it's not bullish. It's just not. And by the way, it would be the same thing on the bearish side. If it was down and it was back up, then it wouldn't be bearish. There's no commitment to that. Now you could say it's a false breakout. You could say whatever the hell you want. You have to use common freaking sense. Common sense. If you want to buy something and it round trips after having a massive move, is that a good thing or a bad thing? Common sense. That's it. Plain simple common sense.
Right.
All right, let's move on.
All right. So money's coming out of these names. Where's it going? I see it going in financials, and then utilities, and for sure, healthcare. Healthcare is super strong right now. That's kind of the theme that's moving forward to. Do you have any other thoughts or insights, or I don't know, anything else about where money is flowing? I mean, it could be parked, cash raising. That's an option too, I suppose. But just looking at the flow of where, literally just looking at the charts of where things are flowing to. I see financials, not XLY.
So let's do it.
XLV. Let's do it.
Let's do banks right off the bat. Do not use the XLF. The XLF is not a good thing. So for those of you that are listening, if those of you that are going to be listening later, the XLF is not the way to do this. If you want, because it's not pure, you need to look at the KBW. The reason being is because the KBW is specifically banks.
Oh, there
The
we go. Thanks.
XLF has insurance companies in it also.
Gotcha.
Because of that reason, you need it to be pure. So the KBW is pure. Okay. In order to get the KBW, you need to have NASDAQ data. If you don't have it, you won't get it.
I'm up on TradingView right now. KBWB. It's got NASDAQ fund ETF.
That's the ETF. That's not the actual index, but it's fine.
Is it? Yeah, I was gonna say, is it like the closest thing I got?
It's fine. Let's just go. I'm going to start blazing through them. Okay, first one, Morgan Stanley. Okay, Morgan Stanley. You had a little bit of a gap up on Friday. I'm sorry. I'm going to keep doing that. You know what I mean? But
yes,
it's a nice pullback. If it can hold this 20, let's just say 206, 208 to 206, you're golden. The only problem is you'll have yourself a little bit of a double bottom. Your only issue is you've got earnings coming. That's your issue. That's your biggest issue. Okay. Goldman holding the 50, trying to reclaim. If it can take out Thursday, what the hell with it? If it can take out Friday, I'm going to say Friday. If it can take out Friday's highs, you're good. It might start what's it called. But again, you got to be careful because earnings are coming. Okay. Next one, B of A. B of A looks really good. Really, really strong. That's BAC.
What is that ticker?
BAC.
Oh, B of L. Okay, Bank of America. Thank you. I didn't know what you were saying for a second. All right. Yes, it looks good. Yes.
That one looks really, really good. I keep that on the radar. Next one, JPM. That's JP Morgan. It's kind of interesting. You really want to see it get above 338, 337, which would really tie into the January 5th high. You really want to see it get above that. It's struggling over here with that. I'd keep it on the radar, but see what happens. Wells, which is WFC, interesting, very interesting. I think anything above 86 is probably going to send this sucker. This might send it. Might be looking for a move up to it. Again, these are not block, but this isn't high beta tech, but that could send it. Maybe even get it up to 88.90. Very possible. Next one would be State Street, STT. This looks really good. Nice bull. It's like a quasi bull flag consolidation, looking really good. I might keep this on the radar.
It does look
definitely
solid.
Be watching this. Next one, Bank of New York Mellon. It's BNY. Also, same kind of deal. It's not really going anywhere, so really don't but it's just more looking at the pattern of what it looks like. Obviously, Citi looks like JP Morgan, B of A. It kind of is holding where it needs to. We'll see what happens with it. Next one is PNC. PNC looking really good. Nice clean breakout, looking really, really good.
Mm-hmm.
And as a matter of fact, if you look at it, it's got your day count. You got day one, add day two. I'm sorry, add day two, day three, trim and trail. Day four kind of got your reversal. So that's actually looking pretty constructive. Always talk about that. And then Fifth Bancorp, which is FITB. Also looking really, really solid, really, really strong.
Why are banks so strong right now?
Yield curve.
TLT?
Oh, really? Not really. What's it called? No, I would even say TNX and TYX even more than anything else.
Gotcha.
Then you look at we could go quickly into just the difference. Let's just look at the XLF. So the first one, Berkshire, I'm going to ignore. Visa is in that.
Yeah.
Visa is a rock star. Literally a rock star.
This thing exploded.
Now you can't buy this now. Okay.
Not
because it's up too much. But if you use the day count rule, which is basically the day count rule is you buy day one, you add day two, you trim and trail on day three. Okay. In this situation, you're not going to get better than this. Now, at this point in time, you can't buy this now. You got to wait. You just cannot buy this now. Okay. So Visa's one to keep on the radar. That looks awesome. I'm sure MasterCard's going to look the same way. MasterCard even bet is also looking good. Same kind of deal, just different type of situation, but trend is completely broken. and MasterCard on its way up. This looks really good. There's another one to keep on the radar. Then you could look at some of the, let's look at American Express. Might as well take a look at some of these. Credit card manufacturer, American Express, this actually looks pretty good. This actually does look good.
Right.
This would be, tomorrow would be day 3 if it continues. This actually looks pretty constructive. I would keep it on the radar. Another one would be BlackRock, BLK, a broker dealer. Nothing special here. I wouldn't waste time with it. Honestly,
yeah, that's tough.
Wouldn't really waste time with it. You could look at some insurance companies. AIG, where is that? AIG, better places to be. Much better places to be. So I mean, there are places that you could be. I mean, some people like to look at Berkshire. I don't. I'm not a big Berkshire guy. But if you look at Berkshire, I mean, it's okay. It's okay. I think it's just a different company, so it's like whatever. Okay. Then you look at, what was the other one?
What's the insurance ETF?
XLF.
No, insurance.
The XLF has insurance companies on it. A pure play insurance?
Pure play insurance. I thought it was like KEI or K.
Hold on. I don't know. I'm not sure. IAK. You're talking about the IAK or the
IAK.
No, you're not gonna. What are you gonna be busy with this MetLife and Aflac and all these other companies? I ain't got.
Okay. That's
your travelers. I mean, what are you doing? Like I'm saying, if you're going into these types of things, earlier. Yeah, no, I'm saying, but if you're going into if you start going into subsets of financials, you're really grasping at straws looking for things. Yeah, there's plenty to do. You could go into, there's plenty of places you could go. You don't have to go there. You could go into, let's say, I know you want to go to healthcare, which is what the XLK, right?
XLV.
XLV. Okay, so let's just go there quickly. I'm just going to blast through this. You go through there. So let's say, your top number one, even though it's not the number one holding, but your top pick always is J&J, global leader in healthcare. Oh. I mean, the stock looks great, but it's J&J. I mean, you have to just be, I'm not saying you can't make money there. I'm just saying there's a very big difference between being a trader and being an investor. It's a great company. It's another one. Lilly, it's another one. That's okay. I mean, these things are freaking expensive, but relative terms. AbbVie, another one. I mean, that looks stupendously awesome.
Mm-hmm.
I'm going to go through some bios while I have it. Let's say Amgen. It's another one. It was one of my favorite stocks back in the day. The trade, love that name. Amgen looking good, but looks like it wants to go to 390. Looking really good. This is as clear as you could do. You could buy this and trade literally against 360, and you have the risk is so defined here. It's like literally a layup.
Right.
I'm not talking about making money on it, but I'm just saying from a risk perspective. Gilead, another one of my favorites. Used to love that name. This is an igniting bar on Thursday. This looks really good. I keep this on the radar. Why not?
Yeah, trend reversal.
Then you got, what was another one? Let's see. Then I don't want to get into the more esoteric biotechs, because then it becomes like a little bit more whatever.
XBI is on a run though. That's for sure.
Was it XVI? What's that?
XBI, biotech ETF.
Oh no, that's small.
XBI.
That's small. That's but the difference in the XBI, I didn't hear you. The difference in the XBI and the IBB is the IBB has more mega cap in it, and the XBI has more smaller mid cap in it.
Right.
It has mega cap in it also, but it's not as. The IBB is driven pretty much by Amgen, Gilead. What's it called? Oh God, I can't remember the names. Hold on. I used to have all these names. I used to trade biotechs like crazy.
Vertex, Amgen, Gilead, Regeneron,
Biogen, Illumina. Those are like big names in that thing.
Argenex, Revolution, Illumina. Yeah.
Yeah. The problem with the things with biotechs and the way you have to treat biotechs, and this is just in general, biotechs need a catalyst. That's what they need. All biotechs, no matter who they are, big or small, all live and die by FDA approval. All of them. The difference between the big ones, like let's say Amgen, Gilead, Biogen, Regeneron, is that they have, or Illumina, is they have so many drugs in the pipe, so many drugs that they have in market, that one drug is not going to make or break it. What really sets Biogen apart from everybody else is that Biogen has a drug that they were dealing with. This was going back years ago, where on Alzheimer's, and the stock would literally was living and dying on that one drug, and the gaps were insane.
Yeah.
Because of that drug. So that's really how these things work. Like Regeneron is very big in. So let's say for those who don't know, Regeneron is very big in eye care. Like they're very big in the eyes. They do other things, but a lot of what they do has to do with the eyes, with their medications. Obviously, Gilead, everybody knows. Amgen, everybody knows how hard Gilead is with AIDS, and HIV and stuff like that. You could do a lot of research. There's a great site. Oh God, let me think if I can remember what it's called. There's a great site that actually has the FDA calendar of who is reporting and when in terms of small, mid cap. I got to think of it. Hold on a second. Biopharma Catalyst. Biopharma Catalyst has a amazing. Did I say amazing?
I think you missed one.
Amazing. Hold on, let me see if they still do it. Yeah. Biopharma Catalyst has a calendar where they basically list on a daily basis every single biotech, what's coming down the pipeline as it pertains to FDA. Not approval, but what's coming down the pipeline.
FDA.
If you're a biotech guy, you've got to use their calendar. If you don't use their calendar, you're doing yourself a disservice. I'm telling you straight, you're doing yourself a disservice. There are guys who specifically, and I know a few of them, that's all they do is biotechs. They live and die by this stuff because they know when it's coming. They know more about the drugs than the actual doctors because they sit there studying this stuff because you've got plenty of time. And you know what's coming and what's not coming. And you could literally, you could make you a year on some of these names. You could also lose you a year on some of these names. But
sure.
The point is it's a way for you to be involved. That's it. So it takes care of healthcare and what's the other one you want to do? Oh, let's do XLE. Let's do energy. We'll get that out of the way.
Energy doesn't look too hot.
Bite your tongue. So let's look at
it's at the 200. That's what it's got going for it.
Okay, so ExxonMobil, just so you should know, which now is no longer, by the way, ExxonMobil. They changed their name.
Wait,
what?
I
don't know if you realize. What? Yeah, ExxonMobil changed their name.
When?
Yeah. Last week.
Yeah, I know.
Sure, I know.
I have no idea. What they change it to?
They now turned it. They turned their name into, I think, ExxonMobil Holdings Corporation, something like that. Changed they just changed the way they kind of did it. But to be honest with you, these stocks have not traded well.
No,
like at all. These stocks have not traded well. They basically all topped out on March 30th. Mm-hmm. It's pretty much where they all topped out, all of them.
Yeah.
But Exxon, I mean, great company, money machine, but it's just not. It's whatever. Chevron going to look like the same. Chevron looks a little bit worse, but again, great company. Don't get me wrong; these are great companies. They're great businesses. But at the end of the day, they're running into all kinds of issues. Another one, Conoco, which is COP, looks exactly like the Chevron chart. I'm going to blaze through these. Looks exactly like it. Marathon, which is MPC, which is a refiner. Refiners look great because the what's it called? The refining margins are strong. So the refiners are going to look better than the integrateds. Marathon looks good. Phillips 66, which is PSX. Okay, nothing special. Move on from that. Valero, that looks great.
Yeah, it does.
That looks really good. EOG, it's okay. I would say Schlumberger, SLB, and HAL are going to look exactly the same. So SLB looks like
trash,
whatever, and HAL is going to look the same way. Why? Because at the end of the day, it's not a question of them not making money or not losing money. Exploration is an issue. So in order to see we'll go to the OAH in a second, but these are all exploration names. Halliburton, Schlumberger, what's it called, are in the exploration space. Transocean, which is rig, they're all in that space. That space is right now not the space to be. Okay, you look out, let's say, we've been talking about this earlier, natural gas. You look at Kinder Morgan, KMI, looks okay. It's all right. LNG
looks solid.
Looks okay. Looks
Looks like
it's breaking out.
Yeah. Trend reversal right here.
I'd want to see it get above 250 and hold beforehand.
We got a gap fill coming potentially if it gets above 250.
That's what I think. Yeah, I think if you get 250, you can get that, and you can trade against. It's basically going to be you're basically trading against. If you want to be tight, 244 and a quarter. You get a little bit 1-to-1, but I think if it can get going, maybe you get to move up to 275 if it really starts to get going.
244 and a quarter from.
You know who started Kinder Morgan? KMI?
No.
Kinder Morgan is actually well, I guess the first thing gives it away. Rich Kinder is the obviously one of the namesakes. Rich Kinder, who was he? Rich Kinder was the president of Enron before what's his face came aboard. What's his name? Oh my God, I forgot his name already. I Googled it. Before Skilling, sorry. Before Skilling. Rich Kinder left Enron, or was fired, or however you want to interpret the way it was. Basically, they parted ways. He started his own company. They brought Skilling on, and then basically the rest is history. But Rich Kinder was one of the founding members or founders of Enron. Just so you should know.
Did not know that.
Yeah. Okay, so what other sectors you want to go out before we go into some commodities?
I really that was it. Financials, healthcare, and you added in energy. I think energy is not the place to be right now.
I would look at
I'll bite my tongue now.
I would look at the miners.
Oh, yeah. So they look pretty interesting. AEM has my attention, specifically why? Because it's, gotten crushed, but it is, it's hit this 150 level. Number one, I think you can argue that's a psychological level, just a nice round $150.
Psychological level for
also,
who?
I don't know, just for the market in general. You talk about these psychological levels, right? They typically end in 5s or end in 0s, or if they're larger, they're $100, $150. $200, et cetera, et cetera.
Does the computer have a psyche?
Are we talking about AI? No, I'm kidding.
Does the algo have an emotion?
No, no.
Does the buy program or the sell program have an emotion? Yes or no?
No.
So this shit doesn't work. It's traders on YouTube who live stream fake funded accounts and say, "Oh, psychological level." There's no such thing as a psychological level. When you're dealing with a computer and you're dealing with a participant that has no emotion, there is no such, it doesn't exist. It's a bunch of BS. That's what it is. It's BS. And I dare anyone to fight me on this and tell me that and prove that I'm wrong. When you're dealing with a computer and you're dealing with an algorithm, the algorithm does not give a shit about psychological levels. It's a number. It means absolutely nothing. Sorry about the wording for your live stream. But
we're all adults here. It's all good.
It doesn't care. It literally does not care. So, everybody uses the warm and fuzzies. Oh yeah, the psychological $100, $1,000, $52,000. The Dow crossed 52,000. Woohoo! It's just a freaking number. It means nothing. It literally means nothing. The media has decided to assign values, emotional values to it because of a number. It means absolute. What's the difference between $1.50 and $2? What's the difference? What's the difference? Nothing. Whole number of this, that game doesn't exist anymore. That game existed when you were dealing with human beings. You're not dealing with human beings anymore. The machine doesn't care. It just doesn't care. And I think that's the biggest, problem in trading that people just don't get. And they sit and they worry about stupidity that they can't control instead of worrying about who they're actually trading against. You're trading against a 24-year-old quant sitting in a desk somewhere who knows nothing about the market, absolutely zero, doesn't care. He's just programming. That is who you are trading against on a day-over-day basis. He doesn't know what the market's doing. He doesn't care what the market's doing. His job is to program. That's what he's doing. Now, Are there days when we had that day when the NASDAQ was down 5%? That's funds liquidating. That's real, 100%. You get these big percentage moves. That's funds liquidating when they're, or just moving cash around. So the ETFs get triggered, selling begets selling, and you get like this cascade. But normal day-to-day gyrations, it is computer algorithm. Anyone who tells you otherwise is lying to you. I don't care what they say. Anyone who tells you otherwise is literally lying to you to sell you something. Why? Because the participant today is all payment for order flow, which is still legal in the US. It is illegal in Asia. It is illegal in Europe. They see your orders. The machine is programmed to front run your orders. That's what it's doing all day long. The machine is just going. When a buy program comes on, you could see it every day, almost on the hour. Every hour, you could see there's a buy program that kicks in or a sell program that kicks in. You could see it. And for the most part, when you see a market, let's say, for example, that's just going one way all day long, and I'm not talking about with violence, I'm just talking about a slow churn all day long, that's a computer. It's a computer. That's what it's doing all day long. So you have to know who your participant is. Once you understand who your participant is, it becomes a lot easier. One of the tricks of trading, especially if you're trading, let's say, futures, and you're doing futures, let's say, on the indice level, you have to figure out what the computer is doing for that day. How many days this week did you see where the Dow was going up, yet tech was going in the exact opposite direction, S&Ps were going in the exact opposite direction? Because the program was buy Dow, sell S&P, sell NASDAQ. Or like you had on Wednesday, buy S&P, sell NASDAQ. S&P and NASDAQ, S&P and Dow were going up all freaking day. They were making new highs all day while the NASDAQ was going in the exact opposite direction. Why? Because that's what the program was doing. So part of what you need to learn, besides the art of trading and all that other jazz that goes with it, is to learn to read the machine. Once you start to learn to read the machine, it becomes a lot easier. It's almost like it was right before I started, in the late 90s. In the late 90s, the trick of what these guys used to do was, when they were tape reading, is they would just look for the inefficiencies, and they learned how to read the inefficiencies. That's why you had the SOS bandits. You could read up on them. It was basically on the NASDAQ. That's how these guys made a killing. I knew a few guys like this. Made a killing. But it's just learning how to understand, not just trading, but understanding how to interpret and understand what the machine is doing on a day-over-day basis. Now, some days the machine doesn't do anything, and it's just whatever. Just so you should know, the machine only works in the directional market. If it's sideways, the machine cannibalizes stuff that they make no money. When it's going straight up, they make money. When it's going straight down, they make money. When it's going sideways and chopping around, they make no money. Don't kid yourself. They make no money. And anyone who tells you that they do, and then the machine and all this other things, is lying to you, because that's not the way it works. I'm telling you facts. I'm in this business a long time. I deal with a lot of companies, a lot of firms. I know exactly how this sucker works, because I talk to people, and I'm telling you the way that this thing goes. It's all machine driven. That's all it is, and the machine will do what it has to do, whatever the program is for that day, and that's it. You think these things are stopping at a dime because of a line or moving averages? Bullshit. The machine is designed to do certain things. It gets to certain spots, it's done. Next, it moves on. That's just what it does. So it's understanding what the nature of the game is, not just the stocks and the rotation, because you can make the argument every day there's a rotation. You can make that argument every single day that there's a rotation here, rotation there, rotation here, rotation there, every single day. So it's really understanding who the players are in the game. And once you understand that, it becomes a lot easier to start to understand, how is the market actually moving? Is the market really moving on economic data? Not really. It's moving on a machine. It's a video game. And every day, people come, they put their quarters into the slot machine, and it goes, and then they just look to see winner, chicken dinner. That's what you're dealing with. It's not pure anymore. Because of that reason, you have to understand that. It doesn't mean just buy everything blindly, just, whatever, because that doesn't work either. But it's just trying to understand who your competition is. Once you understand that, it becomes a lot easier. And a lot of the tools that used to work, we've talked about this 100 times, don't work anymore because they're not designed for that type of thing. They're just not. Whatever, tangent over. It's important because things that you used to use, let's say, for example, how did you used to use clues to figure out what the stock market was going to do? You'd wake up in the morning, you would check what did the DAX do, because Asia, you knew kind of what was going on, and Asia, whatever. You would look to see what is Europe doing. Then you would look, where are the bonds? And then you say, okay, fine. Bonds are here, yields are there. The DAX is doing this. Okay, the straddle is here. Okay, we're probably going to have either an up day or a down day, or what some of the news. You kind of had an idea of what was going to happen. Now, none of those tools work anymore because you have yields that are going up, which is bearish for tech stocks, yet they're going up. Tech stocks are going up. So the clues don't work anymore. And then you have then you obviously use the dollar and other currencies and see where oil is and commodities and other things and try and figure out where things are. And you get some kind of idea. That doesn't work in an environment where the machine is just, like I said, 24-year-olds sitting and programming. That's just what you're dealing with. Plain and simple. All right. Anyway, what other stocks you want to look at before we move on to commodities?
That was good. That was great. I love the passion. Also, great information. That is one thing that I think you're right. It is important to understand that we are playing against a machine as the quote unquote participant. It's no longer humans anymore. And you, like what I just did, these things persist because we all say the same thing. We all trade, well, all trade similarly, but this verbiage just sticks around, and it sticks in our head, and then we just continue to repeat these things without any extra, I guess, forethought of what's actually going on. And those nuances of, hey, this is not necessarily all human participation, this is a machine, is very important to actually recognize.
Here, right. I'll bring up one last thing before we move on to commodities.
Yep.
I'm going to say something, and I've said it in the past, but I'm going to say it again. It's very controversial. I love controversy, but it's very controversial. One of the more famous books that everybody reads nowadays is Mark Douglas's Trading in the Zone. It's a very famous book. Everybody loves that book. I can make the argument right now that book right now is good for the garbage. Don't even waste your time reading it. I could make the argument that book now is good for the garbage. Why? Because the whole premise of that book is the psychology of trading, right? Agree or disagree?
Agree.
Okay. So his whole premise in that book is basically saying how because you have different people coming in and want to do different things than they did, let's say 2 weeks ago, looking to a certain extent at charts is not really so helpful because you're looking for a different outcome based on the emotions of the new traders that are coming into the business, that are coming into the market, to a roundabout way. Correct?
From what I recall, yes.
Yeah, I'm basically paraphrasing. Paraphrasing it.
Yes.
Okay. The problem is, and this is why I say it's good for the garbage. I mean, you could read it in the bathroom, but I'm saying the reason why it doesn't hold any merit now is because the participant is different. The participant is not a human. If the participant was a human, it's a great book. Because the participant is a machine, and because the participant is a quant who's programming, they don't care about what happened in the market. They could care less. They're following a set of protocols on a computer system in a program. So if that criteria is met, depending on what their program is, which is constantly evolving, then you don't have any psychological. There is no psychological. You understand? There is no psychological. The amount of players that are human versus the amount of players that are machines, not even close. Not even close. And you have ETFs. You have more ETFs nowadays in the market than you have stocks. Which when Douglas wrote that book, ETFs were basically non-existent. Again, I'm not saying he's wrong. I'm not saying that he's an idiot. I'm not saying that his book is not worth reading. I'm just saying the principles behind it are, to a certain extent, archaic in today's environment based off of who the participant is. That's all I'm saying.
Fair.
And you can make that argument about a lot of books. Dow Theory. We talked about this earlier. That's good for the garbage now also. Why? Because Dow Theory is needs the Dow to be made up a certain way. It's not made up the same way anymore. How many times have we seen the transports rolling over, which is a major piece of Dow theory, and yet we keep going? Why? Because the way that the committee does stocks now is if you underperform, they kick you out and they put somebody else in, and an effort to keep the indices up. So again, you're dealing with forces now that a lot of these theories don't work on. Okay. Anyway, we talked about one thing. I want to end off the stocks with this: the VIX.
Yes.
If someone can explain this, I would love to hear their explanation. How is it possible you have an S&P, which is basically 7,600? How is it possible you have a $7,600 instrument with a $15 volatility? How does that make sense? How is that possible? How is it possible that a $7,600 instrument has a volatility of 15 or 16, whatever, 16? That doesn't even make sense. I would love to know how that makes any sense.
Because you said this is based off of the calls and puts ratios.
Yeah, it's a mathematical equation.
Yep.
All it tells you is that there's no respect for risk in the market. Zero. They have no respect for risk whatsoever. That's all it tells you. But anyway, I digress. All right, let's move on. Because
commodities.
Get so long in the tooth. Okay, so
yeah,
let's start. Let's
oil.
Let's go straight to oil. Yeah. Okay.
I didn't do my homework yet. Yeah. I'm listening.
Oil is a shit show. That's it. Plain and simple. We're gonna keep it as broad as we can. I didn't do weekend videos this week. I didn't do them last week either. I'm gonna start doing it next week. Just
sure.
The past 2 weeks I haven't been able to do it. To a large extent, it's basically a shit show. This sucker is no one understands it. That's probably why it's going down. Because I think everybody is so bulled up in this thing, which makes a lot of sense. The fundamental backstory, and you've got Jeff Curry out there, every 2 minutes, basically walking around telling everybody how we're at tank bottom, which he's not wrong. But yet we just keep melting lower and lower and lower and lower and lower. There's supposedly theories out there that there's going to be a lot of supply coming, and that supply is going to outstrip the demand. It's going to take time for that supply to hit the market, but we just keep going lower. And by the way, in our world, the number lines are at -20. So really, it's bearish. I mean, at least in our world. So it just keeps going lower. So the more people who pile into it, the more people are getting their clock clean. It's that simple. Going out to natural gas, which is going to blaze through these things. It's dead money right now. It's literally dead money. We're not even going to look at it. It's not even going to bother. Okay. Let's go to gasoline. Gasoline, holding up better. Basically, to a certain extent, basically hanging out between $2.90 and $3. It's okay. Diesel or heating oil, the seasonality aspect is coming into play, so there's really nothing to do here. You can move on from it. We'll skip the grains, just go quickly to gold. My theory is that gold is going to get to 3,800. We'll see if it gets there. When it gets there, I didn't think it was going to happen so fast anyway. It kind of broke 4,000 a lot faster than I thought. It's still bearish. There's nothing really bullish about it outside of gold bugs wanting it to go up. There's really, the trend is down. I mean, this is as textbook as it comes. Let's get to silver. Oops. Silver doesn't deserve to be up here anyway. I'm sure I'm going to get a lot of hate. Silver really belongs in the 50s anyway, even in the 30s. There's no reason why it's up here. Really, this is the 50s. Why the 50s are the important spot? Because that's where the funds were buying it before the maniacs got involved. Before the meme maniacs got involved with this thing, the funds were buying it at the 50s. We were highlighting this almost on a consistent weekly basis when it was on its way from 30 to 50. So that's why it would make sense it would go back there. Platinum, not really doing much. I'm just going to blast through that. Whatever, move on from that. Copper, copper, not much to write home about. Grains are basically dead money at this point. The one that actually got me, and I'm not saying got me because of losses, but really just like completely shocked me, was coffee. My target for coffee is 220 in coffee futures. For those of you that don't know, it's KC. We're trading the U contract, so it's KCU26. It's available on ICE. Are you able to get it?
I am on Trading View here. It might be.
I mean, delayed data, right?
It's most likely delayed data all the way down.
What's your last price? Because it's closed.
301.20.
Yep. Yeah, you're good. Okay, so you got it up there. Okay, good. So if you look at a weekly, my price target on this thing is 220. So we got to about 240, roughly. I think we're going to 220. I think that's a viable target. I think it's going to get there. Again, I wasn't expecting it to get there in 2 minutes. Coffee is the type of instrument that has a lot of volatility. It's really, really awesome. Not a lot of players there, which is also good. But that's looking really, really good. Another one that looks really, really interesting is cocoa. I had a $4,800 price target on that. It freaking blew through that price target like it didn't exist.
What's the ticker
it
there?
Got up to its high. CC.
CC, that's what I thought. Are you on you?
Yeah.
Thank you.
It got up as high as 5,300. It got, I mean, shocking. I mean, this thing has been, it's also an interesting one. Oops. Looking at the weekly, this is looking pretty good.
Yeah,
this might even, I don't know. It depends really. It's really going to be dependent on weather. But this one's looking really, really good. Another one that's looking interesting, but that's really, but not really so much. Is really big. Excuse me. Is cotton. Cotton had some massive moves in June, like massive moves.
Ticker.
CT, Charlie Tom.
Thank you.
So that's kind of looking interesting. A little bit dead. We'll look at a fun one. We're going to ignore sugar because it's $14. The thing doesn't even move enough. It doesn't mean anything. Frozen. What's it called? What is it? I always forget the ticker. Orange juice. Orange juice is kind of interesting. It had a big move the past couple of days. I don't know what it is. It could be. It's either OJ or it could be FCOJ. Depends on. I don't know what they use for it. You just type in orange juice.
I have one spot 78.70 as a closing price.
171.10. So close enough.
Okay.
But it's had a big move the past couple of days. Granted, there's there's a lot of volume in this thing. I mean, it does about like 1,000 contracts a day, so it's like it can't really be in this, but just big kind of interesting. That's kind of where we are, in the world of what's going on. I mean, if you want, we can look at the Dixie quickly. I don't know if you can get the dollar futures.
Dollar, I got it. I got DXY. I don't know what the futures are. You know what the futures ticker is? I mean, DXY looks like it's starting to reverse.
Yeah, DXY is one of them. It depends on really what the platform is. Like, let's say, like I have DX and I have DXY, so it really all depends. Dollar back above 100. It's kind of interesting because a strong dollar is actually bearish commodities. So it kind of makes, it's kind of weird what's going on, but whatever. But that's kind of where we are.
I like it. Good stuff.
What's our concept for tonight?
You know what? I think let's save volume for next week. I think the concept tonight, I think it was actually really good that you went over who the actual market participant is, because I think that is a common, maybe misperception is the right word, that a lot of people still think this is people on the opposite side pressing buttons. And individuals such as myself still overlook the fact that this is more so algos nowadays, more so the computer. Everything's computer, right? Trading against us. I think that is a good special topics. You agree?
Say it again. Sorry.
I say I think that was a good special topics to
Yeah,
cover.
whatever you want. Yeah. Listen, whatever the people want. The problem is, here's the problem. A lot of people don't have insight into who's actually moving things. So you hear a guy who gives you a bunch of buzzwords, they throw certain things out and blah, 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 blah. You know, if you're not dealing with, at least, you know, like with guys who actually deal with, who are in the firms, Fidelity, Raymond James, Susquehanna, you know, the big banks, if you're not dealing with these guys, and you don't really know what's going on, then, you know, the one thing about this business, unfortunately, is there's a lot of nefarious activity and there's a lot of, let's say, how do we say this nicely? People who talk, but and try to sound smart, but don't really know what the hell they're talking about, and they just throw things out.
Right.
And when you don't know, you say, okay, well, okay, fine. He or she sounds like they know what they're talking about. Okay, great. Let's just go with it. But the reality is, trading is hard to begin with. This is not an easy job, and I'll be the first one to tell it to you. As someone who went from the pits to the screen and everything in between, made a little rhyme there. It's not easy. It wasn't. It was easier, but it's not easy. This is the toughest job, without a question. Why make it even harder on yourself by making it even more complicated? This is not a complicated gig. It really isn't. It's a desk job. It is a desk job. It could be a very well rewarding and high rewarding desk job, but it is still a desk job. At the end of the day, it is still a desk job. Why people like this thing, I don't know. Don't ask me. But at the end of the day, part of your job is not just pushing buttons. It's understanding who you're dealing with. Who is your competition? Who are you actually trading against? When you go into any business, you ask Coke. You go to the CEO of Coke and you say, who is your competition besides Pepsi? Who is your competition? I guarantee you, he could tell you exactly who his competition is and what they do different. And I guarantee if you go to Pepsi, they could say the same thing. If you go to McDonald's, they'll say the same thing. You go to Boeing, you go to Lockheed. You get my point?
Yep.
Everybody knows who their competition is and what makes their industry tick. Everybody knows what they're doing. I'm talking about the ones that are successful.
Mm-hmm.
You ask, let's say David Solomon at Goldman, and he'll tell you the same thing. He'll tell you the same thing. You ask Jamie Dimon at JP Morgan, they'll tell you exactly what it is. Does that mean why? Why is this important? Because when you understand your business, you can make better decisions. You understand what makes your decisions work or not work. Now, because you're dealing in probabilities, your decision making could be 100%. Listen, you could be 100% right and still lose money. It's just the nature of the beast. You know, I'm wrong all the time. It is what it is. You know,
Mm-hmm.
but at the end of the day, I still make money. At the end of the day, I have plenty of days where I would say 60 to 70% of my trades are wrong, but I still make money on the day. Because again, it's understanding my business. It's understanding what it is that I'm actually doing. On top of everything else, it's understanding who the players are. Why are things moving the way that they're moving? So you're not surprised by when certain things are going. Anything that you're going to see on a chart, anything, for the most part, a moving average, a profile, a footprint, that shit doesn't work. It's a reference for you, but for the most part, nobody cares. It's not going to stop. It's not going to stop something from moving. It's a reference point. If it happens to line up, okay, congratulations. Yay, Fibonacci, whatever else tools you're using. It's tools. But I'm not trying to say don't use your tools. That's not what I'm saying. I'm saying is you have to understand who the player is. When you understand who the player is, if you're trading stocks, you better know what ETF your stock is in. So if you're trading NVIDIA, you're trading Apple, you better know which ETFs it's in, because there are more ETFs. And if the ETF starts selling, what do you think is going to happen to your stock? If you're trading futures, same kind of deal. You need to understand fair value. You need to understand all this stuff. Why? Because it makes things more easier to digest and understand what it is that you're actually doing. Pushing the button, reading the chart, that's the easy part. Anybody could do that. A monkey could do that. Understanding what's actually moving things around. Like the worst thing that can happen, if you're a futures trader, the worst thing that can happen right now is what's coming, and that's single stock futures that are coming at the end of July. Because single stock futures, We'll just talk about that quickly, but that's actually important. I think it's 50 stocks that they're bringing, and basically each contract is going to be equal to 600 shares. They're going to be trading 24/7 or whatever, 23/6, whatever it is. Let's assume 24/7 because there's a big 24/7 push. What do you think that's going to do to underlying stock? If you're a stock trader, and now you got to deal not only with the option maniacs, but now you got to deal with future maniacs, what do you think that's going to do to trading of your stock? You're trading Apple, or you're trading Nvidia, or you're trading Google. Now that you know that there's a single stock future, that each contract is equal to 600 shares, it's probably going to be because all these maniac firms are going to put it out there for, next to no margin. With $1,000, you could buy, I don't know, 2 contracts or 3 contracts or 5 contracts, which would be the equivalent of anywhere from 600 to 3,000 shares. What do you think that's going to do to your underlying stock?
Yeah,
it's going to completely change the complexion of it. Completely. You have all of these double and triple leverage ETFs that came out. SpaceX I think there's a double leverage short SpaceX now, which we didn't talk about, whatever. But what do you think that does to the underlying? So that's what you have to understand, like, what is going on. That's how you become successful. The best traders, they know their shit inside and out. They know where the stocks are, what's going on with them, what the option markets are doing. They're not just reading charts. They know exactly what the hell they're looking at. And it really makes a big difference. So just, things to think about.
Something to think about.
Yeah.
Awesome. Well, I think this has been another good weekly preparation. Covered a lot of names. Covered commodities, special topics. Know who the players are, who the actual players are. And I think we'll continue on through the next following weeks. Special topic next week. Let's talk about volume, how to use volume or not use volume, the different nuances of volume, and basically why we as a trading group don't really find value in volume or use volume to make trading decisions really at all, especially compared to the standard equities trends and things like that. Sound good?
Yeah, works for me.
All right, sweet. I guess we'll wrap things up. You can find myself, Built by Trading, here on X. Obviously, you can look up my YouTube. It's the same thing, Built by Trading on YouTube. That's my handle. Dan, where can people find you?
That's a good question. It's at Babyfish_TG on X. Fish Pond Trading Group on the web is our website, and on YouTube, Fish Pond Trading Group.
All right, sounds great, and thank you for your time, per usual. Always good stuff, and I look forward to the same thing, more topics next week.
And I'll see you tomorrow.
I'll see you tomorrow.
All right, have a good night.
You too.